Good morning, this is Mayor Valensky with Driving Markets. Let's do a quick recap. So Friday was Good Friday, the Easter Monday also was Jewish Passover the whole week, and therefore volumes are down and the markets are very, very quiet. So let's look at some results and let's look at some of what is driving markets today. So we'll start off with the 10-year bond. The 10-year yield is running at 2.9%. Be aware, the higher the yield goes, then the greater impact it's going to have on shares, the Nasdaq and growth stocks. Quite simply, simple mathematics. An investor will look to where their money is likely to get a safer and guaranteed return. And as interest rates rise, then that is going to pull more money out of the growth stocks and out of the Nasdaq, simply because people want to get a guaranteed return on their investments. The 10-year bond is running at over a 3-year high. So what impact is that having generally on interest rates? Well, let's look at some mortgage rates. In the UK, a 5-year interest rate was a 5-year locked interest rate, fixed interest rate, was running about 2 months ago at around about the 1.58 level. Today, if you were to take out a 5-year fixed rate with a lender, typically you'd be paying between 2.98 and 3.5%. That is a massive jump. So all of those individuals who have mortgages that are coming up for renewal or coming to the end of their fixed year term are going to have a big shock when those mortgage rates and those payments are going to shoot up threefold. Yes, threefold, from about 1.5% up to 3.5%. They're going to have a significant reduction in their monthly cash flow. That's the impact of higher yields. Furthermore, Nasdaq and growth stocks do not like high interest rates simply because they are high risk. If you look at the Nasdaq, as I said before, you've got nearly 25% of the Nasdaq is made up from 2 stocks, Apple and Microsoft. The rest of them are all growth stocks. Only 50% of the Nasdaq gives a dividend. So 50% are highly speculative stocks. In other words, people's appetite for risk will be taken away as interest rates rise. And that's what's likely to happen. Let's move on to Bitcoin. Cryptos. Cryptos are also high growth, high speculation, gambling stocks, gambling investments, gambling assets. Now, Bitcoin could go long term to 100, 250. I'm a big fan of Bitcoin long term. However, short term, if you look, it's hit the 38,000 level and then bounced from there. So 38,000 level is a major significant support level. However, if it breaks below the 38,000 level, then it's going to go all the way down to 32,000. And then it's a question mark. Will it from there bounce all the way back up, or will it from there go down even further? It all depends where interest rates are going this year. And I go back to interest rates. I specifically stated at the beginning of the year, interest rates are going to be between 4.5% and 5%. I was laughed out of the room by all the professionals. Everyone said, no way, what are you talking about? It's never going to happen. Maximum 1% this year. Wrong. Interest rates in the States and interest rates in the UK are going to hit 4.5% to 5%. Mark my words. That's where we are going, because inflation is out of control. And obviously you've got the Russian-Ukrainian crisis, which is also pummeling the markets and making grains and commodities super high level, which is not yet fed through to inflation. So you can have even higher readings in May of inflation readings. So that's regarding interest rates, Bitcoins, and that's regarding bonds. Let's move on to the foreign exchange market. Well, if you've got a higher interest rate and higher yields in the States, then that is going to drive the US dollar higher, simply because on speculation that interest is going to rise, the dollar becomes a more attractive investment to invest in because you get a better return on your money. So there's going to be dollar strength around the world against most pairs. So therefore you should be looking on the FX market to look into buying the dollar over this year, because you're going to have dollar strength. That's what's likely to happen in FX. As regards shares, Bank of America yesterday came out with results and beat market expectations. I was very surprised. I thought that Bank of America would come in with actually failing to meet market expectations, but actually it beat analyst expectations. However, Charles Schwab did not, and therefore Charles Schwab was whacked yesterday. The impact of Bank of America beating market expectations pushed up JP Morgan and Goldman Sachs and all of the other Capital One cards, the Capital One Bank and other the credit card companies on the back of higher interest rates. So that's likely to push up the banking sector. Also this week, we've got China GDP. I believe it's out today. Keep an eye on it, considering China is the second biggest economy in the world. Let's see where their gross domestic product and their growth is going over the last few months and where it's likely to go going further. Remember, oil has a big impact on China because China is a huge importer of oil, and therefore the cost of production in China will only rise as a result of increasing oil prices. Also look at gold. I've also mentioned for the last few weeks, I reckon gold's going to go past the $2,000 level. At the moment it's running at $1,975, $1,980 an ounce, but looks like it's going to breach the $2,000 from there, likely to go up to $2,300. Keep an eye on gold. Also has a big impact on markets because gold is used across the board on all types of production, from the iPhone through to your teeth and through to any semiconductors. They use gold as a conductor metal within production of global manufacturing. Keep an eye on gold. That's more or less it, apart from one more point. Elon Musk, Twitter went up 7% based on the battle in the boardroom between Elon Musk and Twitter. He wants to take it private, and there's a battle going on there, and I don't think he's going to let go. Whatever he says, I think Elon Musk is eventually going to buy out Twitter. Keep an eye on it. I've always said Twitter, Elon Musk, where they're likely to go together, Twitter will be a success based on Elon Musk. Big fan, and Tesla reports are out tomorrow. This is Mayor Valensky with Driving Markets. Catch me on LinkedIn, Instagram, WhatsApp, YouTube. Subscribe, like the videos. Speak to you soon.